want to be not only the top dog, but the top dog at a really big company, which is really aspirational. Good for you. If that's your goal, then that's great. Don't leave public accounting before this milestone. Hey guys, this is Bill Hanna. I'm the financial controller. Welcome to another video. Today I want to be discussing the timing of your exit from public accounting. And this is relevant to someone who's either now working in public accounting or someone is in school who is planning to go to work in a Big Four or a smaller regional firm and then transition from there to private industry. So the goal of this video is to walk you through the thought process on when to leave. And so we'll talk about this in terms of milestones, 2-year mark, 5-year mark, and then 6 years plus mark. And so the goal here is that you want to see where you want to end up in the future, what is the role you desire, and what do you want to do in the future. And to simplify things, we'll talk about it in terms of either controller or CFO, which is Chief Financial Officer, and then think about how you want to get there. What are the milestones you need to achieve in order for you to get to either of these two roles, or you can actually do a controller and then transition into a CFO in the future. We'll talk all about that and also the perfect timing to leave public accounting. But first, I want to mention that the benefits of working in public accounting are so many. So the first thing you want to achieve when you work in public accounting is that you will learn how to read financial statements. And this is very important. So when you work in public accounting, you learn how to look at balance sheet, income statement, statement of cash flow, understand basic accounting concepts and apply them in real life. The second really valuable skill you learn in public accounting is time management. So basically you're billing your clients based on the time that you work, and so you'll be tracking every task you do, and this is going to come in really handy in the future. You'll become someone who's very regimented and very disciplined because you worked in public accounting. You don't have to spend in public accounting too many years. As we will discuss, you could spend 2 years and learn these skills, but these are very valuable skills. The third thing you'll be learning in public accounting is going to be Excel. And so you'll learn so many basic and advanced functions in Excel, such as SUMIFs, index match, VLOOKUPs. All of these Excel formulas will come in very handy in the future. And so this is really important to work in public accounting. The other thing too about public accounting is that you'll learn how to tailor a audit program. So you're not necessarily going to be auditing here when you become a controller or a CFO, but just knowing how an audit works and how to tailor an audit program is going to be really important for you in the future so that you can be an effective controller or CFO. And then at the end of the video, I'll talk to you about my own thought process, how I decided for my own exit from public accounting and went into private industry, and my goal as the controller, as the name implies, of the channel, the financial controller. This is what I do now. And I also want to take this opportunity to thank everyone who has subscribed to my channel so far. When I started out this channel, I really only took it seriously in January of 2020. I never thought that I will get so many subscribers, and I'm very thankful to you for subscribing to my channel and listening to what I have to say. I'm trying to give my advice, all what I learned over the years as an accountant, the past decade and a half, 15 years, over to you so that you may benefit from it and learn from my own mistakes, and then you can supercharge your own career. Okay, let's jump right in. So let's say that your goal in the future, what you want to do is to be a controller of a small or medium-sized company. So the typical career path for you, if you want to be say a startup controller or a medium-sized company, you want to spend 2 years in public accounting, and you want to exit after 2 years and take a senior accountant role. So where you learn the ins and outs of billing, accounts payable. You're seeing these things here in public accounting, but when you go into a private industry, you'll get real exposure to setting up billing, for example, into an ERP system, setting up billing into QuickBooks, understanding how to work the financial statements from the inside compared to when you're here in public accounting, you're seeing it from the outside. So this is the typical career path for someone who wants to become a controller of a small or medium-sized company. Now, on the other hand, if you want to be a controller of a large company, so let's say your desire is to be a controller of a really large company, say Johnson & Johnson, Facebook, these giant companies. So what you want to do here is that you want to spend more than 2 years in public accounting. So typically and ideally, you want to spend 5 years plus. So you're either going to fall in this bucket or this bucket here. This is 5 years, so you'll spend 5 years in public accounting, and then you transition out into a manager or senior manager of financial reporting. And from there, you might go into a controllership role, or you might go first into a director of financial reporting, and then from there you'll be going into a controller role of a large company. That's if you want to become a controller in the future. Now, let's say you want to become a CFO in the future and you have your heart set at taking the top dog position at a company and becoming the chief financial officer, which is great. If you have that goal, it's awesome. A CFO has very similar role to a controller, but CFO has a lot of strategic finance functions. So he or she is more involved in the ins and outs of the business, running the actual business. So they are spending most of their time sitting with the sales team or the operations team, running the actual business, and spending very little time looking at financial statements. So they spend maybe 20% of their time looking at financial statements, and the bulk of their time looking at forecasts and looking at cash flow and understanding how to run the business more efficient. And so a lot of times a controller can become a CFO, but if you look at the makeup of CFOs, you'll find that 90% of CFOs come out of finance, not from accounting. And so only 10% of CFOs come out of a controllership route. So in the 90% bucket, the majority of CFOs are coming out of strategic finance roles. And what I mean by strategic finance, and we'll get to that here, is that roles that have to do either with equity research, investment banking, FP&A, which stands for financial planning and analysis. And so if this is your goal here and you want to be a CFO of a startup or a small and medium-sized company, you want to then begin in public accounting, spend a couple of years. So you don't want to spend more than 2 years. This should be the cutoff here. No more than 2 years. You need to get out of public accounting and get into a more finance-focused role. And what is a finance-focused role? That could be a senior financial analyst of a small or medium-sized company, or even a large company. You could also go into investment banking. Now, this is kind of less likely and difficult to do. A lot of public accounting people want to get out and go into investment banking or equity research. It's a difficult industry to get into and mostly hire out of business schools. But if you are really a high-performing auditor, let's say, or someone working in advisory in a Big Four, you still have a shot if you can really craft a good resume, have good connections, and you really are a good performer. Then you can go into investment banking or equity research. From there, or a financial analyst role. From there, you want to skip this. You don't want to really go into financial reporting or either of these roles into financial reporting. You want to go directly from being an analyst into a role in between. A lot of times it's a director of FP&A, director of financial planning and analysis, and then from there you will go into a small or medium size company CFO. Now, if your goal is to become a large company CFO, so you want to be not only the top dog, but the top dog at a really big company, which is really aspirational. Good for you. If that's your goal, then that's great. What you could do here is that you either could take the route that we talked about from 2 years to financial analyst and into a small or medium-sized company CFO, spend some time here and go into a large company CFO role. And then the other way to do this as well is that you can become a controller of a large company and then transition into a CFO role. It's less likely that you'll be successful to go from a controller to CFO role, but it's doable. A lot of people have done it in the past. And so there's a couple different ways, as you can see, to get to the route of a CFO. But the one thing that I want you to get out of this, if you get nothing else, is that for finance role, for CFO, you don't want to spend more than 2 years in public accounting. You want to spend about 2 years, at the most 3 years, get your credentials for a CPA license, and get out and spend more time working in private industry and things that are going to be more strategic in nature, more than reporting. Reporting is going to be more toward controller. Analysis is going to be more geared toward a CFO or a chief financial officer. Now, for me, for the choices that I made for myself, and I chose controllership route, and I spent 2 years in public accounting at PwC. I got out and I went to work as a senior accountant, and then from there I went to work as an accounting manager, and then from there I transitioned into a controller role, and now that's what I do today. I'm the financial controller of a software company in New York City. Now, that choice was made by me because I wanted to be in the controllership realm. So I made this very consciously. This suits my personality more. I'm more of an introvert. I spend most of my time in the controllership. I spend most of my time talking to my own team and then sometimes speaking to the rest of the company. Whereas I know for a CFO, most of your time you're talking to a bunch of different people from all around the company. So this is more tailored for someone who thrives in these social circumstances and someone who is an extrovert. Controllership suits my own personality more. The second reason is that a controllership usually comes with less stress. When you are the CFO, you are carrying on your shoulders the burden of the finances of the whole company. The buck really stops with you. You're responsible 100% for the financial success of the company. As a controller, your responsibility is to produce correct and timely financial statements. And of course, you have to watch for the financial assets of the company, but really the buck stops with the CFO when it comes to that stuff. So really the CFO has the highest stress job in the company, while the controller has a slightly lower stress job. And that's the second reason why I chose this route. Well, that's it for this video, guys. I hope you enjoyed it. I hope that it's helpful. And if it is, please give it a thumbs up. If you haven't already, smash that subscribe button and hit the notification bell so that you don't miss out any of the videos that I put out weekly. And I'll see you in the next video.